Do you really think that experienced real estate investors pay a lot of taxes in Spain? Well, let me tell you that you are wrong, and in this video I'm going to show you how a non-resident foreign investor in Spain can invest in real estate while minimizing taxes in order to maximize the return on investment. The tricks and strategies that I'm going to show you in this video are especially useful for foreign non-resident investors in Europe. Keep in mind that the free content that I bring in my videos is the fruit of many successes and failures, many completed property investments, and lots of conversations with other experts in Spain. If you really appreciate this content, I would like to ask you to subscribe to this channel and hit the like button to help us reach a larger audience. And then I would also like to emphasize that I will not get into the ethics and morals that each one has towards paying taxes. I believe that paying taxes is fundamental and necessary for the functioning of a developed nation, and I will never encourage tax evasion, but simply show you full legal strategies to pay the lowest possible taxes, and in this way promoting actually foreign investment into my country, Spain. What I'm going to explain in this video is not an investment advice, but simply a reflection based on my own experience as a real estate investor in Spain. So as I have explained in many other videos, the rental income tax in Spain differs depending on the tax residency of the owner. There are three different tax regimes, one for Spanish residents, one for European residents, and one for non-European residents. As you can see, what really matters is not your passport, but where your tax residency is located. Since most of our clients and subscribers are non-European tax residents, I will focus my analysis on a potential non-European investor wanting to invest in Spain. First of all, let's see what taxes a non-European resident investor, let's say an American, would have to pay on the income obtained from his real estate investments in Spain if those assets were owned by an individual and not under a Spanish company. This is by far the most common structure used by foreign investors in Spain, and I can already tell you that it's not usually the best options in terms of tax efficiency. So as you can see in this table, let's assume that the income obtained from your real estate investments is 200,000 euros with total operating costs of 50,000 euros. So the gross profit before taxes would be 150,000 euros. Well, so being a non-European resident, the personal income tax would be 24% on the income obtained, without the possibility of deducting the expenses. So the taxable base would not be the 150,000 euros, but the 200,000 euros. In this case, the taxes to be paid would be 48,000 euros and would leave us a net return of 102,000 euros. Now let's take a look at the second strategy. In this case, the difference is that instead of investing as an individual, you would invest through your own Spanish limited company. As you can see, the difference is that instead of paying that 24% on the income, you would pay a 25% on the profit. So in this case, you would be able to deduct all the expenses related to the real estate investment, such as utilities, property management fees, renovation and maintenance costs, and so forth. This strategy is much more profitable if you intend to create a portfolio of many investment properties in Spain over time. And also you must understand that this strategy is interesting as long as you reinvest the money into the company. Because if you intend to transfer the profits to your personal account, you will have to pay the dividend tax, which in Spain is at 19%. So the advantage of this corporate structure is that by operating through a company, you will have greater tax flexibility, you can deduct many expenses, and also you have limited liability on your investments, as you would operate under umbrella of a legal entity, so your natural person would be fully protected. But keep in mind as well that there are some disadvantages to investing through a limited company. I could talk about hours about how to invest through a limited company in Spain, the pros and cons of doing it, and lots of different topics on this matter. But in this video, we will stick strictly to the tax issue. So finally, let's take a look at what I believe is the best investment strategy available in Spain for foreign investors looking for high returns on investment. This strategy requires absolutely no structure. You don't need to create a limited liability company and having to assume all the management and recurring expenses and accounting involved. The method I'm talking about is to invest through a professional operator or general partner in Spain. This structure is also known as a real estate syndication. If you want to know more about this strategy, I invite you to watch this other video where I explain how it actually works. This strategy basically consists of signing a private agreement that allows you to invest in a specific real estate project through an operator who will carry out the operation together with you. The operator will be in charge of sourcing the asset, designing the project, executing and managing the investment. So for the capital investor like you, it will be 100% passive investment. So in this case, the profits you obtain from the real estate syndication will be taxed only as dividends. So you will only have to pay a 19% on the profit, not on the income. In short, you will go from paying 24% on income without the possibility of deducting any expense to paying only 19% on profits, that is deducting all expenses related to the activity, such as insurances, construction and renovation costs, property management fees, utilities, absolutely everything. In the investment example we are using, the effective tax rate would be 14.25% on income, which is almost a 10% less than investing as an individual. At Emergent Investors, we operate under this real estate syndication framework. That is to say, we provide part of the capital necessary to carry out the investment, and the rest of it is provided by other passive investors who only provide capital and obtain a return. For them, the investment is totally passive while we take care of absolutely all the management. However, we only collaborate with trusted investors with whom we have a common goal, as many projects require a long-term relationship. That is why most of our investors are long-standing clients with whom we have maintained a relationship over time. On the other hand, we are highly specialized in buying, renovating, and leasing short-term tourist buildings and hotels located in tourist areas along the Mediterranean coast, as this is the asset class where we have a major competitive advantage. If you think you might be interested in investing with us, I invite you to fill out the form you will find in the description below. We will add you to our list of potential investors, and if at any time we think we might collaborate together, we will contact you.